Now let's get back to the markets. The interest rate cut euphoria might have cooled off today, but can stocks get back to rally mode? Joining me now is Courtney Garcia. She's the senior wealth advisor at Payne Capital Management, also a CNBC contributor. Courtney, good to see you. So the markets have been running largely for a while here. Can you continue buying in, and if so, what?
Yeah, you absolutely can keep buying in here. I mean, we have continued to see that the economy is on good footing. Inflation is actually coming down, that people are really hoping that interest rates are going to start to come down here, which is very positive for the stock markets. We've had a really strong earnings season. And when you look at profit margins, they were up 13.5% last quarter, which is particularly impressive considering that you're already starting to get some of those tariff impacts in there. So I think we're really just showing that the consumer's on good footing, companies are good footing, the economy's on good footing. And if rates do in fact come down, that likely can mean that you're going to start to see the markets do even better, especially if you start to see some of that cash come on the sidelines, which has not been happening. But if interest rates come down, you're probably going to see that at some point here as well.
No labor market concerns after that jobs report that took so many by surprise?
Well, I mean, I think we still have a pretty tight labor market, and I think really what you're seeing is you're not seeing a lot of layoffs, even though hiring has been slowing. But I think, we want to get some more of these reports to come out to figure out what is the actual trend that's happening. But I think at this point in time, we do still have a really tight labor market. Wage inflation has actually been supportive for the consumer right now. So I don't see anything that's really supportive that we'd go into recession or something that would be any reason to get out of the stock markets right now.
So NVIDIA this week, is that just about NVIDIA, or is there something riding on this for a number of other stocks in the AI trade or the tech trade in general?
Yeah, well, the biggest thing with NVIDIA, right, is just how much of a component that is to the overall markets. Because when you look at your day-to-day investor, many people invest in ETFs of the S&P 500 or the NASDAQ or these broad market indexes. And a lot of people actually own multiple of those and don't realize how much overlap you have. But that actually really can start to move the overall markets, especially when you factor in those ETFs that are going to be following that index. So when you see a big move in something like an NVIDIA, which is a large part of those indexes, that's where you can see some of those moves. So I do think the outlook for NVIDIA is pretty positive here. You're seeing the hyperscalers are continuing to spend on AI. As long as they're spending, that is going to be good for the bottom line of NVIDIA. But obviously, that's going to be one of the big reports we're watching this week.